Good afternoon. Thank you for being part of today's Nonprofit Resource Hub webinar. My name is Jill Krumholtz, and my firm is Real HR Solutions. I am an associate member of the Nonprofit Resource Hub, or NRH for short. NRH is a trade association whose mission is to serve and to be a resource and educate and connect members to the nonprofit community. At the same time, NRH serves the nonprofit sector in bridging and connecting nonprofits to each other and to helpful resources. And that's part of what we're doing here today. We provide nonprofits with resources to help organizations grow and thrive. We share a directory of our associate members, and these are vetted, trusted providers and advisors who deliver quality products, services, and education to the sector. NRH hosts networking sessions and events to foster opportunities for collaboration, and both with nonprofit organizations and with experts that serve the sector, like Jacqueline and myself. We encourage each of our nonprofits joining today's webinar to join NRH as nonprofit members. By design, there's no cost to you to join as our nonprofit partners. Please feel free, and we hope that you will go to our website and learn more about the benefits of our association and what we provide. I want to thank at the beginning our founding board members, actually Serini Sertelman, Nonprofit Sector Strategies, Triumph, and Vanguard Insurance Agencies. And also want to thank our associate members, too many to shout out to here, but a really wonderful group of organizations that specifically service the nonprofit world. So without further ado, I'd like to introduce today's speaker, Jacqueline Morse. Jacqueline is the Vice President of AM Exclusive Business Machines. Jacqueline, as you all know, Jacqueline will be talking about copiers and the what is important in terms of nonprofits and using copiers. Welcome, Jacqueline.
Thank you very much, Jill, and everybody in the Nonprofit Resource Hub, and Kelly for helping put together this presentation. Can you all see my screen okay? I think it looks good now. So we're going to be talking about understanding copier leases, 5 tips to save money for your nonprofit. So just want to start with who is AM Exclusive. Our purpose is to improve businesses' operations with technology while creating pathways that amplify the kindness, joy, and prosperity amongst our community. We've been in business since 1986. In fact, my dad started the company, so I've been involved pretty much my whole life. This was my first ad that I made when I was 6 years old. Thought that'd be a funny tidbit to share. We can take care of many facets of technology for organizations in the New York metropolitan area. Printers and copiers, hybrid work enablement, voice over IP phone systems, IT help desk, IT security, business continuity, and disaster recovery. We have partnerships with Microsoft, HP, Xerox, Lexmark, Papercut, Webroot, WatchGuard, and Datto. So we're a small team of 14 employees, but with these larger business partnerships, we can do a lot for our clients. Our core values: helping you succeed. We will always seek ways to help, even if that doesn't involve you becoming our client. Impeccable commitment and communication. We do everything we can to fulfill our commitments. Honesty, integrity, long-term relationships with mutual respect and cooperation are important to us. Always improving. We value and welcome feedback in all circumstances. That's the only way you can improve. And creating a community of kindness. Life is short. We believe that being kind and respectful in all our interactions can make a difference. I put together the sales oath of honor. because as a business owner, I've had a range of experience dealing with sales teams looking for solutions for my company. So our goal is always a win-win situation. We will always sell the products and services that are in the best interest of our clients. We will not waste your time. If at any time we determine one of our products or services is not the best fit for you, we'll explain why and refer you elsewhere if possible. We'll be agents for positive change. If we do find one of our products or services is a good fit for you, we'll continue to stay in touch, until you realize that benefit, and we will always respect your wishes. If at any time, you say this is not a fit, we need to move on, we will respect that, and we will respectfully disengage from communication. So today we're going to cover leasing basics, in simple terms, how to understand what a lease is, the principle, the difference between fair market value and dollar buyout, 5 critical tips that will help you make the right decisions for your organization, and how to get a free cost benefit analysis of your current leases. Ultimately, we're going to cover how to redirect funds used for copiers to doing what your organization does best in helping your community. A quick overview of leasing basics. It's a financing tool. Instead of purchasing a machine upfront, you pay interest over time to a leasing company to spread the payments. Principal is what you would pay today. So that's, the amount that, a certain leasing rate is applied to get the monthly amount. Fair market value leases have a lower finance rate, but at the end of your term, whether it be 36 months, 48 months, et cetera, you'll have to pay a certain amount to own the copier. Dollar buyout, the monthly payments will be higher, but at the end of your term, you could pay $1 and you own that machine. If you purchase a machine outright, you will always pay less money. So for example, copier cost to purchase and own indefinitely, $10,000 today. You would pay $10,000 and you would own that machine, forever. A fair market value lease payment for 36 months is going to be about $285. So at the end of 36 months, you would have paid $10,260 and you will not own the machine. You have to send it back to the leasing company. So if you paid it, day one, $10,000, it's always less expensive, just buy it up front. So why lease? The only reason is because you can't afford to make a lump sum payment. The copying industry has gotten many businesses used to leasing machines because most vendors, all they quote is a monthly payment. Our company always quote the purchase price and the lease. Some clients go for the purchase price because they have the funds and it will save them in the long run. For instance, one of our clients is a bank that was leasing their copiers before they did business with us, and I presented them with the cost to buy it. They're in the business of financing, things anyway. So why would they pay that extra amount? So they bought it outright. Every month, your copier still works for you after the lease is over. Your organization pays $0 for your equipment aside from the ongoing maintenance. So here are the 5 critical tips to ensure you get a good deal on your copiers if you have to lease. 1, ask for the purchase price of the copier to avoid being overcharged. I alluded to this earlier. We always provide the purchase price. This is why. What sounds less expensive? $20,000 or $386 a month? $20,000 does. But if you lease a copier that costs $20,000 today, a lease will cost you about $386 a month for 60 months. So, it's easy to not realize how much you're paying for something when it's broken out per month versus, when you're looking what it actually costs. Number 2, ask for the recommended average monthly volume to avoid being oversold. This is an example. Would you lease this huge office building if your team only had 3 employees? But I've seen it over the years with copiers. You'll have this huge copier that I pictured here on the left, and you're only printing like 3,000 pages a month to it, when this copier can do 50,000, 75,000 pages a month. This can happen because on renewal, you're generally just quoted the latest and greatest upgrade to whatever you have now, even if maybe your volume has gone down over time, which tends to be the case over the years. Printing volume is going down as workflows are digitized. So, I advise that you Google it, whatever model that you're going for, try to Google the model and the recommended monthly volume, and you'll generally get some results. Some manufacturers don't have that information as easily as other ones. Xerox is one that usually, posts that information. So that machine I pictured on the left, you see the recommended monthly volume is 20,000 to 75,000 pages a month. So if you're doing 3,000, you can look at downsizing that machine and save a lot of money. And it's important, I want to point out that look for the recommended monthly volume as opposed to the duty cycle. The duty cycle is a really, really high number, and that's just the industry's way of, that's the most amount of pages you could print to in a month without the copier completely falling apart. It's really not a practical number. They will list the recommended monthly volume, which is, the amount you could print to, and then it's the maintenance is easily handled with that. So the second part of this is you have to understand your monthly volume to make, the best choices. If review your lease agreement, did your payment include a minimum number of copies? If your agreement included a minimum number of copies, you'll need to add that to whatever overage pages you were billed in factoring your volume. So you want to look at your monthly and quarterly invoices. Generally, you're submitting page counts to your vendor, at this frequency. So on the bills, there'll be some reference to those total page counts. So you're going to look for those references for page counts on the bills and do the math to understand your volume. I suggest you look at 2019 versus 2020 versus 2021. 2020 printing went for mostly everyone. So, and workflows were digitized possibly over this time. So, what you did in 2019 may not be the volume that you're going to be directing to these machines in 2021 and beyond. So you need to factor all this in when you're trying to right size your fleet and save money. Another thing to look at is you need to print and copy in 11x17. A lot of copiers are just sold, that's the tabloid size paper. You may not necessarily need that. I would say, probably half the time I run into situations where people don't need the 11x17. We could put a smaller footprint device that's much less expensive to purchase and to run. Tip number 3, keep the maintenance costs separate from the lease. This helps you avoid extra finance charges. You pay the hardware lease to the finance company, and the maintenance fees goes to the repair company. Again, the lease is simply a means of spreading out payments over time instead of spending it all up front to purchase a copier. When the maintenance is included in the principal, you pay finance charges on it. It's like paying for most of the supplies and parts you will need over 3 to 5 years on day one. You don't have to. Another tip is to avoid being locked into a set number of pages per month as trends for office printing are going down. So I would, ask to just be billed a straight out per page rate for whatever you print and not locked into 1,000 pages a month or 3,000 pages a month, etc. What this also allow you to do is if something changes with your vendor and the service, deteriorates over time, if the maintenance charges are separate from the lease, you can move to another vendor to take care of the maintenance for you. If they're bundled in, you can't do anything because leases are, you just can't cancel leases. Tip number 4, beware of early upgrades. You should only upgrade early if you are experiencing issues with your copier. It's mostly a tactic employed by copier vendors to keep competition out. So if you were paying $1,000 a month for your copier and your vendor came in 6 months early before the end of the lease and proposed you a new machine, all they're doing is adding $6,000 to the principal and, calculate that new deal from there. There's no way to get out of paying the full amount for a lease. Once the, papers are signed by the, with the leasing company, they give that principal amount to the vendor or whoever it is, and now they own the machine and you're on the hook for that entire amount. As I said, the remaining payments are just added to the principal for the lease of the new equipment. If you wait until the end of the lease, you will save money, because instead of, adding another financing charge to that $6,000, you just pay that out and start a new lease with new equipment. So you might ask, you may have found yourself in the situation before where someone came in early and it looked like the monthly cost was lower, but it's really generally just a manipulation of the numbers. If you wait until your lease end, whatever you proposed, that monthly payment would be even lower. So there's a few reasons how this can be manipulated. Your current contract costs were escalated annually. There's some agreements where I've seen up to 10% annually that amount is just raised, even when maybe costs to, maintain don't, increase at the same rate. So when you put in a new copier, it looks a lot less expensive because you were just raised up so high the other one. The lease terms are different. You could be going from, a 36-month lease to now a 60-month lease. And, those payments are extended out over time, so they look lower. The new equipment could cost less, whether because it's, downsized. That's typically could be a reason. I said 9.9 times out of 10, waiting until the end of the lease, then upgrading will cost you less in the long run. There could be some special deal that somebody has because they have a machine in inventory or something, and some special promo that, it would end up being less expensive, but I would say it's very, very rare. With all these manufacturers, they're running promos, on monthly, quarterly basis, to upgrade early and have the price be that much better when it makes sense to wait to the end is extremely rare. Tip number 5, lease to own versus lease to upgrade. Stop the cycle. Manufacturers are obligated to support equipment they make for a minimum of 7 years. While 7 years to own a copier may be pushing it in some high volume cases, you should be able to get at least 4 to 6+ years out of your equipment. So if your lease is coming due soon, I have some recommended strategies. 1, get a quote from your existing vendor for the cost to purchase your copiers at the end of the lease. And you can consider keeping any copiers that are still working well and the costs work out. So it depends on the lease type you have. Not every situation the costs will work out. Some fair market value leases have lower rates, but that amount at the end of the lease that you're going to pay is going to be a lot more to own it. So it really depends on the situation. For example, we had one of our clients practicing law institute. They had a total of 7 copiers that we replaced back in 2015. When their lease came due, 3 of them were in higher volume areas that they decided they wanted to upgrade because we could still support it, but they were just breaking down a little more than they wanted. And so they upgraded those 3, but the remaining 4 that were in lower volume areas, they kept and they still have to this day, and they're running fine. So they saved a lot of money doing it that way. And the 3 that they didn't want to use anymore, we were able to donate to organizations that had, lower volume needs because they were still working. If the above is not an option, it doesn't make sense to purchase anything, we recommend getting new equipment with a 36-month fair market value lease from a reputable leasing company. We use Great America Leasing. They're pretty accessible. I think no matter, what vendor you're using, et cetera, you can request them. They guarantee the purchase price at the end of the lease to be no more than 15% of the principal. So you can rely on using them, and having that strategy to purchase the equipment at the end, and it will be cost effective. So 3 ways that ends the presentation on specifically on the copiers, I just want to go over 3 ways we can help you, and then I'll open it up to questions. So I created a website, amexclusive.com/NPRH, Nonprofit Resource Hub. So the first is you can download our white paper. It's on that website. Click on the button. So it covers all the content in this webinar. You could share it with whoever you want. 2 is request a free cost benefit analysis. My team and I will review your current copiers, print and scan volume, lease documents, future needs, and business practices. And we'll help you to get a buyout quote from your existing vendor and advise whether or not it is worth to, purchase the machines. There's a section of the website where you can click on that and fill out a form to request that. And lastly, we have some printing and scanning equipment donations for Nonprofit Resource Hub members. There's small printers and scanners for, office use or small work groups. We sell a lot on an Amazon store. We get returns from time to time, and our team inspects them. They could be for use in your headquarters, an employee's home office, or a member of your community that can use it. So get on that website. There's a link to our store with all the lists of these open box deals, and there's a form you can use to request a donation if you find something that could be of use to somebody. And then I just provided my contact information. You could always reach out to me directly.
Jacqueline, thank you so much, and thank you all for attending. Please, I know that there was a lot of information here. Please go back and digest it, and certainly feel free to reach out to Jacqueline with your questions. And also, we would hope that you would reach out to other members of the Hub if we can help you in any way. Just a point of information, we also want you to be aware that we have launched a job board on our website where nonprofit partners are able to post jobs for free. So please take advantage of that. Please visit us at our website and for more information, and also certainly we would very much appreciate and look forward to you joining us and to joining future things that we are presenting. So thank you, Jacqueline.
Thank you. All right, take care, everybody.